Well, good afternoon and welcome to this webinar from FS Club. The title, as you can see, is Transforming Retail Banking for Streamlined International Transactions. And I'm delighted to have here Richard Callis, who's the Client Solutions Director at GFT, and Richard Stockley, who's Director of Partnerships at Currencycloud. It's going to be easy for me today because I don't need to distinguish which guest is which. I just say over to you, Richard, and that'll be quite straightforward. And I'll let you guess which one of the Richards has just flown in from Vietnam, because I didn't believe it, but it actually just landed this morning and is looking chipper and perky. Anyway, you'll know me. I'm Michael Mainelli. I'm one of the directors of Zien, and it is a real delight for us to be able to introduce so many of these webinars, which we can only do thanks to the tolerance, generosity, and frankly, the wide-ranging interests of our many sponsors whom you see here. And I think today is going to be interesting because we'll be looking today at technology, economics, and finance, and very much in a global sense. GFT has published their latest banking disruption index, which covers over 2,000 consumers asking for their opinions of their retail bank, and particularly in this case with reference to spending money abroad and sending money abroad. And I think I won't trail the results to you. But as you can imagine, people have very strong views on this subject, myself included. And certainly Richard, who's just back from Vietnam, will probably be able to regale us with the story of making those payments as well. Meanwhile, just to remind you the sort of rules of the road here, my job is to get out of the way as quickly as possible and let you hear from our experts. We are going to have a presentation from Richard Callis and then followed by Richard Stockley, and we do have approximately 20 minutes for Q&A. So it should be a lot of fun and an opportunity for you to participate. And how do you participate? Well, please use the GoToWebinar chat facility. That will allow me to feed your comments, questions, observations into the discussion with the two Richards here. And please do use that because we're here with you. We're not on WhatsApp or watching our emails or anything else, as you should be here with us. The second thing I was going to point out is, yes, this is being recorded, and it will be going up in approximately 2 working days, so probably Thursday afternoon. And finally, yes, the slides are available. Now, we also have today 4 polls to get your opinion, so please do be ready. We'll be hitting 4 polls in rapid succession, and it will allow us to get the tenor of the audience, how you in turn feel about all of this. So with no more ado, Richard Callis, the floor is yours.
Michael, thank you very much. I'm delighted to be here with you again and to talk about the latest edition of the Banking Disruption Index. I'm also happy to be joined by one of our key partners, Currencycloud, with whom we're building out strategic digital solutions for many of our clients. Today we're going to talk about the Banking Disruption Index, the 3rd edition of this. With the advent of summer and people thinking towards holidays and vacations overseas, we thought it was only fitting that the theme for the latest Banking Disruption Index should be overseas spending. But first, let me tell you a little bit about GFT. If we can have the next slide, please. So GFT is an engineering organization. We focus on solutions involving cloud, as well as transformation projects, helping clients move into cloud and utilize the latest technology. We're over 10,000 specialists worldwide, operating in over 15 markets worldwide, and we have over 35 years of experience. Our services, as I say, they are varied, but we do have a large focus on digital transformation, essentially amongst the banking industry. Richard, would you like to introduce Currencycloud?
Yeah, absolutely. Nice to be here. Thank you for bringing us along. Love working with GFT. Currencycloud, we are a Visa solution, part of the Visa money movement portfolio of products. And we are a specialist international banking infrastructure. So we sit within the plumbing of our clients and enable them to receive money, convert that money into the currency that they need to, and get it to the right place in the world conveniently with modern architecture.
Thanks, Richard. So if we have the next slide, please. So first, let's take this back to the origins of the Banking Disruption Index, so I can set some context around it. So the last time I had the pleasure of joining you, Michael, I talked about the Banking Disruption Index, what GFT was setting out to do. We looked at a lot of research papers where there was research into consumers and consumer behaviors, and also around the banks and the services that the banks offer. There were no research papers that actually looked about consumers' experience and feelings and sentiment toward the digital services that their banks were offering, and also about the digital services they expected their banks to offer in light of the digital experiences that they experienced across wider market sectors. So we started the Banking Disruption Index. It was launched last year, and in our initial survey, we found that 48% of the consumers wouldn't actually trust their banks to manage finances during a recession. And we explored what that meant for consumers and what the banks themselves needed to do in order to foster and forge more trust amongst their customer base. We also had the responders indicate, so over 2/3 said that they would prefer to communicate with their bank or interact with their bank using digital services, whether that was in-app or whether it was electronic medium such as chat, rather than more traditional methods such as going in branch or making telephone calls. In the second of the BDIs, we looked about how customers felt in the cost of living crisis, and we realized that 77% of customers actually felt anxiety when they were looking at the mobile apps, checking their balance. And we also understood how frequently customers would go to check their balance. And actually, one of the stats that came out of this, and the last time we spoke, Michael, was the fact that within the new digital banks, the satisfaction level was higher and the anxiety level was lower, simply because of the communication methods that those banks were using to real-time communicate with their customers. And actually, in that second survey, 43% of customers highlighted that they would prefer to liaise with their bank digitally rather than visiting a branch. So if you have the next slide, please. So for this edition, as I said earlier, the focus was on international transactions. So looking ahead to summer vacations, travel, and understanding how consumers feel about the way that the banks provide them access to their money when they're overseas, and the charges that they levy for that privilege of accessing their own money. And so we looked at the reasons that people were traveling, whether that be leisure or whether that was to send money to families. So if someone has perhaps got family overseas and they're the main earner because they're working in the UK, for example. And those figures were 57% of people actually spent money overseas, with around 32% transferring for friends and family. And business travel actually, surprisingly, only came in at around 12%. So with this in mind, our latest research, it was designed to discover how those customers were actually thinking about their experiences accessing their own money abroad, understanding whether they felt that the fees were fair, whether the fees were clear and transparent, and did they have access to the services that they expected, and was that in a timely fashion, and also were they happy with that experience. I believe we have a poll now which actually picks up on those points so that we can see how the audience might feel around that, and then we can compare that to the findings.
Excellent. Well, we're just launching that poll now, folks. So are you clear on the fees you are charged by your bank when spending abroad? Richard, the audience is very fast at voting. In fact, almost 3/4 have voted now. Oh, somebody's just changed their mind. Well over the mark, and I think the time has come to show the results. And the answer is 3/4 of the us are not clear on the fees that the bank charges. And we have a second poll coming up, which is, are you happy with the level of fees you are charged by your bank when spending abroad? I did remark that I wasn't too sure how loaded this one was, and I think yes, we're about to see that. 3/4 of the audience are almost there. We're just over that mark now, and we will collate those responses and send them. So 3/4 again. So 3/4 are unclear, but they're still unhappy, which is pretty good. So that's interesting. Are they unhappy because they're unclear, or are they just unhappy at the fees that they don't know what they are, just they're being charged? Anyway, back to you, Richard.
Thank you. So that's actually quite interesting, because that marries to a lot of the findings that we found in the that came out of the survey. So in the first findings, we looked at the different methods of payments that we used when customers were spending overseas. Obviously, card payments came out most popular. Clearly, there's an awful lot of countries that still rely upon cash, but when we looked at card payments, 47% of responders said that they prefer to use a bank card from a traditional or a neobank, being a new digital challenger bank, for making those transactions. Cash was still very prominent, but accessing cash via ATMs and the fees and charges that were applied to those ATMs also came out as quite significant within the survey. And it also highlighted then the way that consumers feel about having access to cards to spend when they are overseas. And in my own experience, actually, from traveling, as you mentioned earlier, going to countries such as Vietnam, it was almost, in many places you went to, being able to make a card payment was a pretty standard affair. Contactless was standard, but actually then trying to make a payment via a card on a mobile phone was something that many of them had never seen before. They weren't even aware that you could pay on a mobile phone, but that's actually starting to propagate. And I think that will spread and become widespread in the UK, exactly the same as we saw it here during COVID. So if we can move to the next slide, please. So in the second set of findings, we explored and did analysis around customer sentiment around the fees, whether they felt frustrated or whether they felt they were fair. We found that 26% of consumers understood the banking providers and foreign spending fees, and around 25% of consumers wanted their bank to provide better transparency so they could understand the breakdown of fees and charges, or even understand those in advance. The research also found that 32%, which is a significant number, do not think that the banks are actually being fair. They think that the fees are high and unreasonable, and with a further 38% actually admitting that they don't even know what fees are being charged. So they don't know what services are being charged for, how much they're being charged, what commission is being levied, what exchange rate they're receiving. And I'm sure this is something that if I bring this across to you, Richard, this is something that from a Currencycloud perspective, you're seeing also.
Yeah, absolutely. About trying to provide that transparency and that clarity to consumers so they can make an educated choice. I was actually going to throw a question back to you, Richard, given your recent travels. You're in Cambodia. Cambodia is a fantastic place because when you go to the ATMs, that spits out US dollars rather than kip or chat. I forget the currency out there. I'm wondering, with your travels, were you aware, and was it transparent for you that the levels of fees that you were being charged at those transactions, or was it opaque as a user on the ground?
It was more opaque than you could possibly imagine. I made the mistake of actually withdrawing Riel, and the first shop I went to was priced in US dollars, simply because of the volatility of the local currency. The way they've sought stability is now by pricing everything in dollar. Their preference is to receive dollar, and therefore every payment you have to convert from dollar to Riel in order to make the payment. And even when I was paying on a card, it became very confusing as to what I was actually being charged. It was simplified somewhat because I actually took advantage of Revolut when I was spending overseas, which I believe is underpinned by your platform.
Correct. Yeah, Revolut's a good customer of ours.
And so in that respect, I was paying for goods and services, and I was actually receiving a real-time communication that told me exactly how much I'd been charged for that. And I could explore that transaction to see what the exchange rate was and what fees were being applied to that, if any.
I think the interesting point for me in this research here, you've got 32% of people that don't believe it's fair. You've got 38% of people who don't even know. And in the research, and for those of the audience who haven't downloaded the research, it's well worth a read. It actually lists out the main challenger and incumbent banks and the fees applied. That to me says if those are mutually exclusive, so 70% of those that are serviced are either actively disgruntled or are open to being disappointed if they're unfortunate enough to work with a bank who charges high fees and they find out about it. That's an extraordinary opportunity for a new player or a disruptor to come in there and upset it. So I was really interested to see that as part of the research.
Yes, and I was talking to a client recently actually about cross-border overseas payments, and in their own analysis they said that most of their customers only made payments in local currency or in euro, and they had very few that made foreign currency transfers in other currencies. And I asked them, have they done the analysis to see how many of their customers are actually transferring money into one of the new challenger banks or neobanks that actually offer low cost foreign exchange? Because it could be that they're already losing or have already lost that customer base to those organizations in that respect.
Absolutely.
Yeah. So if we move to the next slide, please, we'll look at the final set of findings, which actually talk to that point around the new banks. So the more digital savvy customers are actually already embracing the services and offerings of digital only, mobile only banks that do actually have access to low cost cross-border payments networks to actually avoid the high fees that some of the traditional banks are still imposing on customers. In the survey, we found that 42% actually already do have access to one of these new digital bank accounts and are doing so simply because of the currency exchange benefit that they offer. So they're already shopping and they're already moving that cross-border away from more of the traditional banks. And 39% of customers stated that it was literally because of the fees and charges that they are migrating away from it. And it's the byproduct of that is that if you're doing all of your cross-border charges, you become accustomed to spending and using that platform, and it starts to become the primary platform of choice. And I know certainly that's what Monzo and Starling, for example, are experiencing. They offer the low cost, but actually then they start to attract more of the traditional banking business for local market too. And I believe you're also involved in at least one of those organizations.
Oh, yeah, absolutely. It's almost easier to name the neobanks in Europe that we don't work with than the ones that we do. So Starling, Monzo, Revolut, Bank, we all count them as part of our clients. And it's interesting, Revolut, when they first came out, everyone thought they were crazy, offering free low cost transfers and low cost FX when abroad. They actually struggled to find banking providers to work with because no one felt that their business model would work. And then fast forward to now, and the vast majority of neobanks that are out there are taking that same view, that it's whilst the array of offerings that they offer, they certainly don't see themselves as just a cross-border offering. They see themselves as a challenger across multiple banking sort of services. That first rung on the board, that first reason for somebody to download a Revolut card or a Monzo card or a Starling card and go and spend, obviously then puts it in that wallet and has a potential to be that, that top of wallet card experience.
Yep, absolutely. And I remember having those conversations with the team from Revolut in Canary Wharf Tower a few years ago around how would they propose to make money if they weren't charging for all of the cross-border charges in the way that the traditional banks were. And of course, as you say, we were all proven wrong.
Yep, no, absolutely. You look at the diversity of the revenue streams now, and it is quite an array. Profitability is challenging for these neobanks. There's no doubt about that. And it'll be interesting to see how that transpires, especially in challenging market environments at the moment. But certainly in terms of attracting customers, giving them an experience that they value. Ask the 25 million Revolut customers that it's not working, and hey, they're there, they're present. It's almost an incumbency now.
It is. So if we move to the next slide, please. So indeed, taking those points and then looking at what that might mean for the future. So in the research, we saw that customers were demanding better banking services, particularly when abroad. 28% of those said that they would like their banking provider to offer real-time exchange rates, which is exactly what's offered by those challenger banks that are actually stealing the market share. And 1 in 5, interestingly, said that they would be interested in having access to their bank's customer services in-app or via digital methods to help them resolve any issues they had making payments abroad. That's an interesting one, because we know that on the back of every bank card there is a local phone number for access and also an international phone number for access, but customers were looking for a digital, low-cost or nigh-on free method for accessing their customer services to help them with any issues they had while they were abroad. And as I said, in my own experience, here 19% would like that real-time spending update sent directly to their phone to actually tell them how much something's cost, not just with the exchange rate, but being able to look at what additional fees that they'd incurred as a result of that in a digital method from their phone. So there's a real opportunity, I think, for the banks to actually step up and offer that transparency and be very clear with customers in a real-time fashion about the fees and charges that they are leveling on their customers for accessing their own money overseas. And that came out loud and clear in the research. And as Richard said, we have put in there a breakdown looking at the fees and charges, commissions, and the difference is absolutely significant between the more traditional and the challenger neobank. And once that's more widely understood amongst consumers and they realize the saving, I think the movement away from the traditional banks, unless they respond, is going to be fast and it will be significant.
Yeah, I tend to agree with that. Some of the more incumbent banks that are in the UK banking segment, they're charging close to 3%. And if you think about your overseas, you go out for a nice meal with the family, it comes to 100 euros, and then 3 euros is going for the benefit of the bank. That starts to add up. I was also interested in this research. 2 things that jumped out to me was, the real-time exchange rates. That's music to my ears. I'm hypersensitive to FX, being in the industry that I'm in, but it's nice to see that that's actually shared by a good proportion of the population as well. The other one that jumped out, which was interesting, was 30%. Granted, this was in the lower age bracket, certainly younger than I am, the 25 to 35-year-olds. 29% wanted the ability to pay from digital wallets. So that ability to load foreign currency in advance. So say you're going to France, you load up your euros and have that euro balance spent against while you're over there, that element of control. Those sorts of features that we're, maybe a couple of years ago, we would have seen as very, very specialized and very, very bespoke, are starting to, almost encroach onto order qualifying territory, real-time rates, wallets, customer service, app experience. So I think that's that order qualification, that almost table stakes, is interesting to see come through in the data as well.
It is. It avoids that whole shopping around that used to happen, where you would have your traveler's checks or your currency, and you would be looking at the exchange rates almost on a daily basis, working out when was the right day in your holiday to actually to exchange for your foreign currency. And now you actually have that ability, if you do have a digital wallet, of being able to avoid that, simply because you are able to get those exchange rates that are favorable at any point in time, rather than being a day rate set and they jump significant from one day to another.
The question that always that I've never been able to answer robustly, and Richard and Michael, you may have an opinion, and perhaps the folks on the call here, is we've talked a lot about cost, about that raw. I'm making a purchase, and this is what my bank is charging me for the privilege, and about the experience, that in-app experience, that seamless, that trust, that notifications, those real-time rates. What's the balance that tips you from your current bank to a new bank between cost and experience? Those two things are not necessarily linked. Which one has a greater impact on my propensity to change provider? I think that'd be fascinating to see if some folk on the call have an opinion on that.
Yeah, we've got quite a few comments here, but maybe just let you guys roll to the end of the deck, and then we can pick that up, because people have got quite a few opinions about that. Yeah,
it would be interesting. So if I bring this to a conclusion, and we can move on to those. So thank you. So we had a significant figure. So over a third of consumers raised the issue that they didn't feel that their bank was keeping up with technology. They were seeing other service providers being able to offer better services using technology than their own banks. And it would seem that the traditional banks are those that have the most work in order to meet those customer expectations, certainly within the report, where we highlighted the significant difference between those using a correspondent bank to those actually being able to use digital platforms directly. The difference is staggering. So if traditional banks are to make foreign spending clearer to understand, and they can improve that customer experience, then they do stand a chance of being able to retain that customer base. However, if they don't, then I think those digital savvy will only increase. And it shouldn't be particularly difficult for the traditional banks to be able to exploit the services and the networks that are available to them in order to be able to implement those lower cost real-time exchange rates and cross-border payments. Would you agree with that, Richard?
Yeah, absolutely. It's the reason we exist, in terms of a platform to aggregate the complexity around those cross-border movements. Certainly, we are passionate about it. But there, and this is Rich. This is getting into your specialist subject around that complexity. Whilst the opportunity is there, the ability to marry that up with legacy infrastructure, old technology is not, it's straightforward as a journey, but it's not always trivial.
Yeah, exactly. And we see that a lot, so that in pursuit of better services or better technologies, banks are actually starting to move to more of that composable architecture around those services, so that they can actually intercept the various different transactions, so that they can actually then leverage different providers for Forex, different providers for cross-border movements, rather than it being a monolithic, set in stone, end-to-end process that actually then just sends messages out to a correspondent bank in order to then receive an acknowledgement back. The settlement process is, as you know, Richard, is immediate. The trade is booked into the platform. You don't have to wait for the settlement fees, charges, and all of the things that actually exist when doing sort of more complex international movements.
Well, I think you guys have really hit on a nerve here. There are quite a few comments here. I'll start with Liz Thrussell. Liz says HSBC has travel money for all currencies. I transferred money to euros and paid an exchange rate. The info said no charges, but when I used the ATM, I was charged 7.5% on the transaction. How does this work? And Starling charged her 2%. So, very intriguing there. Then we have an interesting bit here from Michael D'Souza. It's hard to be happy with what is being charged when it's not pay what the bank is charging in the first place. So I think one of the big points you're clearly making here is, more clarity on the charges before you worry about maybe what your competitive rate is. That's the first thing to start with. Second thing we have here, Richard Sage has got quite a few. I'll come back to a few of those in a moment. But he was wondering specifically, does Currencycloud also power TransferWise? And if not, who do they use, or do they do it in-house?
Yeah, they used to be a very good customer of ours. They've built up they've moved on. I think they've built up their own local banking relationships now. So no longer powered by Currencycloud, but certainly known to us.
Okay. It's Michael Souza. Sorry, not Michael Souza. Richard Sage also goes on. There are guidelines for inclusion of those who, for example, don't use technology which affect design. Could I enter a plea for design to also consider those of us who, on principle, do not enter financial passwords on our mobiles? The apps are fine, but don't neglect the web pages, which I personally also agree with. Because one of the things I hate is this idea that I'm supposed to, on all these circulars, keep my phone open all the time. And the worst bit is when I'm traveling, I'm desperately trying to preserve battery charge. And so this kind of thing that everything needs me to be active and available is really quite painful. Richard Sage again, the typical 3% charge by incumbents in the UK and US is still lower than many other countries. Poland seems to be 5%. Although it's extremely difficult to find this information out from the website. So those were some of the comments coming up there. And I'd like to maybe move to a comment from Dio Agiobi. Interesting, the wallet is commonly used in a number of African countries. Mobile banking is very fluid in a number of African countries. Substantially increased the number of banked individuals, and the fees are immediately apparent, according to this. Any thoughts on that?
It's certainly not my specialist subject, but what I do know about Africa is the amazing inroads of the telecoms, using the telecoms network as the conduit for money movement, and wallets being mobile based and not necessarily linked to a bank account, as we're traditionally used to in an economy like the UK. So that has meant that those barriers to having an account, and then that account being the linkage to financial inclusion, moving that and shifting that to a mobile phone, which is much more obviously commonly used, has been my cursory understanding of it has been real revolutionary in Africa.
That's exactly right. It's the advent of the communications network across Africa have actually meant that offering wallets and access to technology through mobile phones and networks has actually, sped up access to money for the previously unbanked, and the ability to transfer money in a way that wasn't possible before, simply because of access to more traditional banking networks and branches.
Now, there's an interesting problem here about the, why do people transfer? We know that Britons are in general really loath to transfer, and I think straightlining banking growth in the UK amongst the challenger banks, I think they won't get to 10% by 2100 or something. It's outrageously slow transfer rates, and the idea is that the phrase always used is that people in the UK transfer their bank account less frequently than they change their spouse. So, and those are the genuine facts, which is kind of sad. Maybe it's more sad about the divorce rate. But when it comes to challenging these things, Richard, you asked the audience, is it the cost or is it sort of the service level? I wonder how much of it to date has been necessity. So in other words, I need to transfer money to a particular country, therefore I open the account, if you see what I'm driving at, and then I find it's actually all right, and I use it constantly. But that's probably fading away as the coverage does seem to be broadening. And you're quite right, I think, to draw our attention to, what are the service levels, what's the transparency level, and what are the rates. But in this area, Richard Sage again, what do you think of Atlantic Money's aggressive undercutting of charges charged by existing fintechs such as Revolut, appears to be an explicit intent to stick to one service of transfer, rather than diversify?
Interesting. I'm not actually aware of that. I will go and have a look after this podcast. Thanks for the tip.
Okay, cool. And Richard, again, I can tell you one bank which has monitored transfers to the currency fintechs, Sparkasse in Germany, who closed our account on the grounds that we were currency trading by moving our euro from Sparkasse to avoid their outrageous fees, which is pretty amusing. I too have had some odd experiences in German banking where yes, accounts have been for all sorts of reasons.
The regulation around FX in Germany is slightly different than over here, so that doesn't surprise me.
Okay. Now, have you ever thought, either of you, about what the effect of central bank digital currencies might be on this market?
Look, there are a number of initiatives that are happening. I know of a couple out in Asia where they're trying to create greater linkages between trading countries. There's one between Singapore and India, I believe, and I think some of them are anchored on digital currencies. I'm not sure if it is the blockchain or something else. Yeah, it's interesting. Certainly not my specialist subjects from a central banking perspective. It's alluring. The technology, certainly when I was close to it in my IBM days, really wasn't there to do it at scale. But I know it's coming on leaps and bounds all the time. I can certainly see advantages in having better transparency and clarity. But then how do you create those linkages cross-border? That's a tremendous collaboration of some pretty sizable, complex institutions, and I imagine it's less of a technology problem and more of an organizational problem in order to surmount those challenges.
Yeah, I'd agree. It's very much, from what we're saying, it's very much in its exploratory stages. How that will evolve and how that will sort of transfer into reality, yet remains to be seen, I think. I know it's certainly interesting for the central banks to be able to have their own digital currency, so they can actually start to look at regulation around more of the existing sort of Bitcoin type exchanges that are going on. So as soon as you've got that central bank digital currency and stable coin, then they can actually start looking at greater regulation, I think.
I wonder how much effect it'll have on the retail banking experience, though. I think that's certainly. I don't even know if it would be a fast follower. You know, most money that's in circulation at the moment is already digital, albeit not on a blockchain. So whether there is that driving use case that drives a indelible tokenization type of play, I'm not sure.
Yeah,
Well,
I would
actually,
agree.
central bank digital currency projects are explicitly not using blockchain. There's no point for it. You know, if I'm the central bank, I'm the central bank. My ledger is right, whatever you say. I don't need an independent ledger that's going to disagree with mine. And this has been missed by most of the cryptocurrency people. And it's extremely clear. The Bank of England's been studying this for 7 or 8 years, and the reports say we're not using blockchain, we're not using consensus, and this has got really nothing to do with crypto at all. In fact, one could argue with the recent bank savings, rescues, in the sense of Silicon Valley Bank and First National. What's actually happened is America's basically guaranteeing everything. Therefore, you have a government guarantee for your money. In the middle, you've got this messy bit of thousands of banks and all that. It's an inefficient system, but you're effectively being guaranteed by the central government. And you know, it'd be nice if they gave you a direct account, but if they don't do that, that's neither here nor there. So
yeah, for consumer protections, that's the main thing, isn't it? The noise and the nuance creates opportunities for new players to offer new products and new solutions and be a bit different. So I think it's a good thing that there is that flexibility.
Agreed. Well, look, we've drawing to the end of time, I'm afraid. It's been great, and we really love, Richard, we really love these surveys, and the disruption index is great to see. You had me laughing here when you were referring back to the days of travelers checks and checking the rates. I remember wandering through Korea during the financial crisis, desperately sort of waiting as long as I could as the won fell down. And the other one was last year. My father sadly passed away, but we had a whole bunch of travelers checks from 1999 or 2000, and we went to try and cash them. And folks, if you're holding on to any travelers checks, please try and cash them in immediately if there's any chance. American Express had very little interest in us. We had to go to 3 different banks before one would finally take it, and the only way was having a phone call directly with Amex in New York. So it's not easy, and the world is changing rapidly, as we've just seen in this last conversation on CBDCs. So fascinating stuff, and we're looking forward to hearing from you again, Richard Allison. Thanks so much for joining us, Richard Stockley, and looking great from all the travel, folks. Now we do have in our travel logway, we've always found it difficult to thank our panelists properly, but I'll come to that in a moment. Firstly, may we please thank all of our sponsors. Really great of you to do things, and of course one of them is GFT, and so we're thrilled to be able to put a sponsor on today, Richard. Folks, as ever, go and check the website if you want to know what's happening in the world that's going on, but we do have a number of events coming up. And for anybody based in London, next Tuesday, we have a physical meeting, which is really quite exciting at Sadler's Hall, complete with teas, coffees, and little sandwiches where we've cut the crust off. So do come and take the sandwiches from us. But very, very finally, to both Richards, we have a traditional way of thanking guests, because our technology is a little bit backward as well on the user experience of applause. Have our Korean karmic clapper, which hopefully is of use in reminding us that we really need to pay far more attention to the fees charged and the clarity of those charges as we move around the world. Thank you so much for being on with us.
Thank you, Michael.
Thank you very much.